Hey everyone, the professor here, and welcome to today's Sunday full crude oil analysis video. Now, before we get started on this weekly chart, let me just tell you that even as a seasoned trader, I was very apt into believing, I thought last week we were going to drop lower because there's some liquidity areas and some areas of equal lows down in the mid 75s, as I mentioned on last Sunday's videos, that I thought they would target. So this week, even for someone who's been doing this for quite a while, I was reminded, and I want to remind you, and I want to remind myself, that we have to continue trading what we see and not what we think sometimes. And that's where the trading psychology becomes difficult if we're not in the right mindset. Okay, so even as I thought we were going to go lower, not that we didn't take some good buy positions, but I was very jaded into I thought we would go lower before going higher. So I want to make sure that we are focused in the charts. I'm going to give you everything that you need to be successful this week, because we are actually going to focus in on zones this week. We're going to focus in on structure, and we're only going to trade structure to structure. And then I'm actually going to show you where to get out of a trade if a trade goes against you, because that would then be the next structure. So I want you to stick around until the end of the video. I'm going to give you some entries, some structure. And what I want you to do is when you get to that part of the video, I want you to go ahead and pause it. And I want you to go ahead and mark up these zones as I am marking up my zones. Okay. So I'm going to go full screen view, and we are going to start on the weekly chart. Okay, now if we look at this weekly candle from last week, this is a bullish engulfing candle from what just happened over the previous weeks. So this signifies that there's a very strong potential that we can continue going higher on crude oil, just if we looked at this bullish engulfing candle. Now, when we go over to the left here, we have to take a look at where and what price has done before. So if we look right here, price has been to this area now 4 to 5 times, and it has stopped in its tracks and it has reversed down. So I'm not saying that will happen this time, but what I am going to do is I'm going to mark this level right here, because as you can see, this has been a previous level of resistance on the weekly chart. Okay. And by the way, for those of you in our international communities, thank you so much for watching. You can always go down below and make sure you turned on closed captioning if you rather just hear me through words in your own native language. So that will be available for you as well. So, and the other thing I want you to take a note is that I am using a futures chart. So make sure that you correspond to price action, but I am using the latest trading view micro WTI, let me say that again, WTI crude oil futures chart. Okay, so for our futures traders, this should look exactly how your futures chart is looking as well. Okay, so we've been here before and we have rejected. Obviously, in this particular occasion, we did not. We went higher and then we went lower. So we are here at a very critical state when it comes to the weekly chart, just based on this bullish engulfing candle. Of course, there's a possibility that we at least start higher, and then we'll see if we fall any lower. Now, on the weekly chart, to give you some perspective, okay, some perspective, we are basically not only at a level of resistance, but we are very near that 50% retracement area. Again, just putting that graph up there so you can kind of get a perspective about where we at every time frame as we walk down the various time frames. Okay, and I think that's just important to note, because what we first have to understand is that on the bigger side of the candles, when it comes to the weekly, okay, we did have a bullish engulfing candle. So I am going to remove this fib level. And what I want to do next, I am going to leave that weekly zone right there. What I'm going to do is I'm going to mark this, okay, as a possible weekly resistance area. Okay. And I don't need that to be 24. I'll make that 20. So as I refer back to it, I can take a look and say, okay, that is a weekly possible resistance. Well, we had numerous areas of resistance around that area right in here. Now what I want to do is I want to go ahead and drop over to the daily chart. Okay. So as I look at the daily chart and I kind of bring this up at a bigger, level here, again, looking at what the weekly did, I can clearly see here that there are a few levels a little bit to the top side that possibly this crude oil can go to on a daily level. And I would say it would be right around that 82, 50 to 60 area. Okay. Just basing it on previous wicks and previous areas over to the left. And again, that could be plus or minus, 30, 40 points. Okay. So as I'm looking at this now on the daily level, I understand that this could be a possible weekly resistance. And then this right here, let's go ahead and mark this, right? I do see daily resistance here. Okay. So I'm going to leave that here for this particular area. But I want to start, my focus now is on this weekly first resistance. We did see, and as we go down into the smaller time frames in just a minute, we did see towards the end of the day on Friday that we did have some retracement happening at this weekly level. Okay, doesn't mean anything right now because the market hasn't opened, but just FYI as we kind of move through the different time frames. Okay, so we basically came back up to this area right here. All right, so understand that when you see me draw these white lines, they are not specific to a price point. They are an area of resistance, or to the bottom, it'll be an area of support as we begin to mark up these levels. So that's important to note as we move forward. Okay, so we are going to now begin to walk down these particular steps, and hopefully you will have an opportunity to mark up your zones as we move forward. So when it comes to the daily, we want to go ahead and look at a couple possible floors where it has reached the bottom before. So we're going to mark that area there as both a floor and both as a possible area of resistance. We're going to tweak these as we move down. Okay. And then we're going to mark up this floor right here. Now, this was the floor right here that I thought we were going to possibly target earlier last week. Okay, as we talked about from the Sunday video, I thought they were going to come for these lows. We came very low, very close to taking out those equal lows, but we stopped short. We stopped at this area of support, and some of us were buying from here, but they never fully came to close out these lows right in here. So that is where, as price began to move up, and we were coming back up to these areas, even though we were taking sells in our trading group from this upper area here, I just thought they were going to fully come down to close this and bring price a little bit further below. But as you can see, that did not happen. So we are here now when it comes to the daily. And so we are going to trade these levels on the various time frames. Okay. So as we move down now to the 8 hour, now we want to start looking a little bit more at price action. Okay, this is where the price action is going to begin to really make a difference in what we do and how we trade. Okay, and so I want to begin now to mark up these wicks, because to me, these wicks are very important to identify, because these have been areas before where price has reacted, where price has reacted, where price has reacted, where price has reacted. So I want to begin to mark up these different levels, okay, because I don't want to get caught getting into a buy or sell near an area where we have shown a significant bounce in the very near future. Same thing like from this area right here, kind of in between these two levels, right? We've seen price come down and bounce, and to the other side, we've seen price come up and move down. So again, that would be a strong zone there, because we have both support and resistance. So now we begin to have kind of a working map. And if you just start looking at these areas that are marked right in here, what I really like about these areas here is they're almost at the 40 to 50% point difference. So if you begin to study crude oil a lot, you would notice that they love these 0 zeros and the 0.5 zeros, okay? So the even dollar and the 50-cent markers right around there, you tend to get some type of reversal around that area, at least a significant bump and then opposite direction in that area. So as I mark up these zones, it's just very ironic that they tend to fall pretty close, right, to the 0.50 or to the 0.0 marker. Now, as we begin to develop our game plan, I'm going to move this down. So again, this was our daily resistance. This was our weekly resistance. Okay. So it is pretty clear that we did come up to this weekly resistance and we had a price movement from about 80.83 to the closure at 79.84. That is significant. Okay. That is a $1 price difference inside of crude oil over the last few trading hours on Friday. So we know that a lot of sellers were introduced into the market, and whether you believe they're sellers, whether you believe they're market makers, that's up to you. Either way, price did push down on the technical side of the charts, okay, and left us kind of in this area right in here. Now we can construe this right here as possibly, price coming back down to retest this area, and we may go back up again. So we don't know that because the market hasn't opened. We don't have any price action yet taking us further down or taking us back up. And this is where the gap is going to come into play. Now, what we do know is we see that at this point right here, okay, and I'm going to be taking this off in a minute, we broke structure. Okay, so as you hear me talk about structure during the remaining part of today's video, understand that structure is also going to be your exit. So if you do get caught in a trade that does not go your way, the next structure point has to be your exit if it reaches that structure, because there's a good chance that it can continue or you may get a bounce, but structure or your trading plan or Fibonacci levels, those are all different ways that you can exit a trade versus holding a trade way too long, and then it impacts your margin, or in some cases, it closes your account out, right? Because you overused your margin on your account, and we definitely do not want that to happen for you. So when you see me marking up these areas coming up soon, understand that these are structure points, right? For example, had you taken a sell position here and you wanted price to go down and price went up, this structure point should have been your maximum exit. Okay, because if you were selling here and price took off here, it came to the next structure level. That was it. You got to get out. You got to take that loss right here and wait for the next area of structure, which would have been up here if you would have known about this weekly resistance, and then you would have been selling again from this higher price point. Instead of being in drawdown this entire way and risking your account, you get out at the next area of structure if the trade goes against you. Okay, so just a little example there on how that should have played out inside of your trading accounts. So now as we kind of take a look at this, we have to understand that we have very little, let me correct that, we have no data because the market has not opened. So as we begin to kind of bring it down now, let's take a look at the 4-hour time frame. Okay, and this is where I just finished saying, could this be the actual retest of this zone before we continue going back up? Okay, because if we look at structure from this point right here, okay, once we broke structure, we did make a new high, then we made a low, and then we made a new high. So by all intents and purposes, on the technical side, right, price may come down to about this point right here and then maybe go back up if it wants to make a new high. Okay, that's if it wants to make a new high. So this is just looking at some of the analysis of what could happen if the market decides it is going to go higher this week. Okay, but we are at an area of support, which is previous resistance, as you can see. So this is going to be very important to identify very early in the week what price is going to do. And so again, for those of you that are inside of our trading club, this is why I do the morning analysis and the evening analysis so we can look at these zones and why we chat in the group, because sometimes you spot that this is a better buy position than a short position. And again, that's just the value of being in a trading community. And if you're interested in that, you can head down to the website scrolling at the bottom of your screen. Check it out, and we would love to see you inside of our trading group this week before the next new member hike happens in about 2 weeks. So now that we are here, the first thing we want to identify is that this area is going to be our gap area, meaning this is where price closed on Friday, okay? And we'll see where it opens. Now, over the past few weeks, we've been very successful. On Sundays, we jump on a live analysis inside of our trading app, and we do gap trades, not only with crude oil, but for all the indices as well when there's one of value to trade, and they've been closing very, very nicely for some extra income for our members. So that is going to be the gap. Now, let's begin to walk this down to some smaller time frames. Just kind of see where we're at. So here was the fall. Okay, this was the resistance, and this was the last 4 to 5 hours of trading on Friday. This was the pullback. This was the retracement. Notice again that we are at a floor here. This is why we may see price come back up and then maybe a longer fall. We don't know. We're going to trade zone to zone, but we're not going to get into a trade on Sunday unless there's a viable gap for us to trade. And that will just be to close the gap, not to trade structure, right? I believe you have to wait until really Monday happens. Let London session happen on that Sunday night into Monday morning for me, who's in Miami on the East Coast, in Florida, so on the Eastern Standard Time, because that will dictate what is going to happen, whether we're going to have a new high up here or if we are going to begin to fall down to these levels. So I would use the London session Sunday going into Monday to give you some of those clues that's happening. Because if price does fall back into this area, understanding that we use our fib levels to look for both exits and entries and exits, right? This aligns perfectly with our structure of where we take our fib trades in our group between the 61 and the 88. So then we would expect a possible bounce from here as well, because we just talked about it. If price closes, you see, when you're using fib levels, this is the beauty part. The fib levels tells you where to get out of the trade. Once a pair closes below the 100, you have to exit that trade. That structure has now been broken. So at the end of today's video, you're going to see a video linked up that I did a few months ago that's going to walk you through using fibs specifically for crude oil, how to enter trades, but more importantly, where do you get out of a trade when the trade does not work in your favor? Okay. Capital preservation is key to trading, right? We don't want to see people blowing accounts. That means that you're over lot sizing and that you're probably over trading. Okay. And those are things that we talk about in our group all the time. So I want to make sure that you understand that the fib levels, why I love fibs so much and why I use them in my trading, because they also give you an exit plan. So if this were to happen on a candle coming below this area, just get out, exit with a very tight exit, as you can see. And then we will reestablish either buying the next floor, okay, or if price does come back up, then we're buying up here once we have the break and retest and things of that nature. So this is why it's so important that I include fibs in what I do within these zones, because I look for entries, but I also have exit opportunities for me as well if I need to get out, okay, if I choose to get out. If you're swing trading, and like I do in one of my accounts where I use smaller lot sizes, right, I may not exit the 100. I may look to stack. Where I would get out would be at the break of then the next bottom structure. And that's a whole nother training class. And we'll be doing that inside of our app for our members and our continuous weekly training sessions that we get in there at absolutely no cost and free. It is part of your membership. So this is what we are kind of waiting for with regards to what price may do. So I'm going to remove these fibs here for just a minute, because what I want you to do is I want you to make sure that you have these white lines, okay? And I'll remove this orange here for just a minute, because these white lines are going to be the structure points that we are going to trade this week, Okay, these are going to be the main structure points that we are going to trade this week coming up. So if you're not part of our group, you're not going to have access to this chart because I update the charts a couple times a day. So if you are in the group, don't worry. I'll be saving this and sharing this inside of our trade alert section and chart section. But if you're not in the group yet, you may want to go ahead and pause this video and mark up these areas right now as we begin to look at structure. Now, let's drop all the way down to the 15-minute because we can see a lot. We have a lot of traders who like to trade at the 15-minute mark. Again, I like to do zones at the higher time frame, but then look for the price action and what the price action is doing on a smaller time frame. So what we are looking for here is what is going to happen in this gap area, okay, right in here. Are we going to get price action? Let me remove this for just a minute, okay? Are we going to get that bullish engulfing candle above here, in my opinion? That will then tell us that it's probably going to go a bit higher, right? Are we going to look at Fibonacci levels? If we do get a rise from here to here, right? I see liquidity in this candle, right? Is this going to be our next sell area based on fibs? Or do we want to be a little bit more conservative and see if we can come back up to the next level? These are all things that we're talking about constantly in the group, and why our aggressive traders will take a trade in this area for a reversal based on fibs. Some others would rather wait a little bit more. Sometimes we have a mixed bag. So this is the consistent and constant communication that's so important. Now, if price closes below here, then what we should be waiting for is price going to come back down, give us a retest, and then continue down to the next level. Because looking at these two candles that took off very abruptly, okay, during last London session on Friday, there is liquidity to be grabbed at this lower level. Okay, so I believe that once we break this level and we show candles have closed below this 79, 60, 50 area, we should be coming back down towards this 78.50 area so they can grab some liquidity in these lower levels. But that's not going to happen until we see the price action telling us that, right? We're just going to go zone to zone. Okay, we're going to go zone to zone. Because if you look over to your left, we can clearly see here that last time the price left this area, we went down to this level. This level here, okay, this was just by the naked eye, I can tell you that was a very nice Fibonacci level, probably between the 61, and the 88, and that's what fell. So this is how we use fibs to aid us as well. Okay, we talk a lot about this in our group. All the charts that I share, for the most part, will have some fib levels in it because, again, if we were looking to sell here at this fib level and price continued going up, guess what? There it is. That's your exit, the 100. Once price breaks above the 100, you have to exit the trade because structure is broken and it's going to continue higher. Okay, so it did not break structure, obviously. It respected this area, and we came back down and sold it right back down. Where? Right to the next level. Even though we're doing a 20 pip challenge, we're securing 20 pips on a separate account. This gave you a lot more than 20, but you've got to go right back down to the next level and then see what the price action tells us to do. Okay, see what the price action tells us to do. So that's a little bit about the smaller time frame. Can be a little bit trickier. This is why I like the bigger time frame. And then as a second note, we also use our SARs, okay, to guide some members who want to use it. I like looking at the SAR on the 4-hour and above charts when I want to swing trade because I have an entire strategy on that as well. So the SARs have flipped on crude oil, at least for the meantime, on this 15-minute chart. If we go up to the 30, we see the SARs have flipped to the top side, meaning downward momentum. If we go over to the hour, we did get our initial SARs on the 1-hour chart. And if we on the 4-hour, we have not yet had a SAR flip yet on the 4-hour chart. So again, just by looking at this, I would not be surprised if we're going to get another push up, and then eventually we'll get a push down to smaller levels if that happens, because at the same time, that begins to kind of look at these M patterns that happen in the market as well. So that is kind of what we'll be looking at when it comes to crude oil early in the week as we progress. And again, that's why it's just so important to stay attuned to the charts, set up alerts. And again, members, don't worry, I set up alerts and I let them know, hey, price has reached this level, and then we decide whether we're going to buy or sell, obviously depending on the level, right? You want to buy when it's low and you want to sell when it's high. It's trading 101, but of course you need some other factors to aid you in your trading. So I hope you got some value on today's video, running about 25 minutes or so. Hey, if you stayed here to the end, thank you so much. If you can, hit that like button for me. I would appreciate it. And if you stay to the end, use the code word FIBS, F-I-B-S, FIBS, so I know that you stayed until the end of the video, and I want to shout you out on my next video as well. Hey, if you're brand new, I hope you got some value. Hit that subscribe button, hit that notifications bell so you don't miss out on any videos coming out your way. And again, if you want to join an awesome community with over 170 like-minded traders who are focused mostly on crude oil, and then we sprinkle in indices, gold, and a few Forex pairs for some of the Forex traders that we have in there as well, I encourage you to invite you to visit theprofessortrades.com. Jump in there, no contracts. You can cancel anytime, even though you won't. Our retention rate is 92% because of the value you're going to see inside of our group. Okay, thanks for watching. Have a great week trading. Happy trading. If you have any questions, drop them down below in the comments. I respond to everyone within 24 hours. Happy trading.